Hello and welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, we're going to begin with markets. Sitting with me on my left, as usual, is Karthik and Amit Ranjan. Gentlemen, thank you very much for joining this morning. Let's begin with markets. Karthik, how are markets panning out?
Oh, what else could we ask for this morning, Shweta? Good morning to you too. Hi, Amit. We've reached on Sensex the 67,000 magic figure.
Lovely.
And on Nifty, we have reached the 19,800 figure. So markets opening at record high this morning. Not surprising. We have seen this trend over the last 15 days now, unabated. The bulls have been charging. They are in a rush. I don't know what they're heading towards, but the signals are definitely completely lush green on the markets this morning. 67,100 on the Sensex right now at 10:01 a.m. Nifty is squarely above 19,800 at 19,836 rupees as we speak right now.
Okay.
Points, I mean. As we speak right now. This is, of course, on the back of fairly decent earnings that we have seen, especially across the banking sector. IT space also a bit of a dampener,
Muted,
but nothing really unexpected
right
there, given what has happened in the world. Given the discretionary tech spends on IT reducing drastically from the West, especially US and Europe. But this morning, we are definitely looking at some action on the Reliance stock. Now,
Absolutely.
Reliance yesterday, Shweta, had for the first time in the last 52 weeks touched a record high, and this record high gave the market capitalization of Reliance Industries, took it above 19 lakh crore rupees. 19 trillion rupees is what the market cap of Reliance Industries was as of end of trade yesterday. It had reached its record high during intraday, closed a few points lower, but overall I think Reliance continues to be in news today as well. We'll come to Reliance in a bit, but HDFC Bank, after the merged entity, HDFC and HDFC Bank, trading in the green consistently, one of the most traded active stocks right now, trading at about 16,084 rupees. After yesterday's results on IndusInd Bank, we are seeing positive traction there. It had announced a sequential as well as an annual revenue growth, as well as growth in profitability. IndusInd Bank right now trading at 1,414 levels. Now, let's come back to the Reliance story that we had started with. So yesterday, when the stock ended at 2822, it was among the 52-week high, taking the market cap of Reliance to 19 lakh crore rupees. Right now, as we speak, Reliance shares are already above that mark at 2840, which means add another almost 0.7% or so, a percentage point, which means the market cap of Reliance has now very squarely breached 19 lakh crore rupees. Maybe add another percentage to that, so 19,000 crores or something would be the figure right now. So another 19,000 crore rupees almost added to the Reliance Industries valuation. As we spoke, ever since the market opened last 45 minutes or so, almost 20,000 crore rupees is what Reliance has added to its market valuation.
And I think a question that's weighing in on everybody's mind, and that is, what exactly is leading to this rally?
So, a lot of factors leading to this rally. Now, Reliance Industries as a whole, of course, when you look at the parent company and go back 6-7 years when Mukesh Ambani had pretty much announced that data is going to be the next oil, I think this diversification from being a largely oil and textile based conglomerate to everything around data, financial services, retail and what have you, Reliance has really expanded its foray across the board. And I think the excitement in the Reliance stock right now also stems from a very important dateline, which is July 20th, tomorrow. So tomorrow, Reliance Strategic Investments is going to get demerged from the parent company of Reliance Industries and get flagged off as a separate company called Jio Financial Services. Now, what Reliance has done very interestingly in this whole chain is that it is doing a 1:1 share offer, which means for every shareholder, for every one share held by any shareholder in the parent Reliance Industries, there is going to be a 1:1 additional stock, almost a buy one get one offer if we were to take the Reliance retail parlance, where the JFS stock, the Jio Financial Services stock, would also be offered to the existing shareholder. So for somebody who holds one share of Reliance is going to get pretty much free of cost, one share of Jio Financial Services tomorrow, and thereafter, I mean, as many shares as you own in Reliance Industries as of close of trade tomorrow, which is Thursday, as many shares held in the parent company of Reliance Industries will be the number of shares offered to you for Jio Financial Services free of cost.
All right. So, and the much anticipated, I think on the bourses, the listing is expected to be tomorrow.
That's right. So the listing of Jio Financial Services, erstwhile Reliance Strategic Investments, happens tomorrow. It is touted to be among the top 5 biggest financial companies in India on day one of its listing. Now imagine the kind of value unlocking that Reliance is trying to do with this. Number one, analysts expect that the JFS shares would be traded anywhere between 160 to 190 rupees the moment they list on the bourses. So that is the kind of value unlock. Would Reliance be able to add in a 1:1 ratio on the existing Reliance Industries share price? Would it be able to add about 200 rupees in a day? It wouldn't. So it would need to hit upper circuit, almost go up 8 to 9% to be able to add those 200 rupees in its current value. Now imagine with this unlocking, the JFS, Jio Financial Services, will have pretty much the same number of shares as Reliance Industries does, each share going between 160 to 190 rupees. So that's the kind of value unlock that Reliance is doing with JFS being listed tomorrow. It is, as I said, going to be among the top 5 most valued financial services companies, and therein lies the real business model. Now, why would Reliance demerge? It's not just value unlocking.
I was about to come to that.
So, I think
the rationale behind demerging, I think many of our viewers would want to know why the demerging, what is the strategic importance of demerging at this juncture?
So, the strategic importance of demerger is value unlock, but the strategic importance of being a pure play financial services company right now is an opportune time, because we are talking about government spends on infrastructure. We are talking about unlocking the animal spirits of corporate India. We are in a high interest rate regime. Now, how does a financial services company really work? It tries to borrow cheap and lend expensive, right? JFS will have no challenge in borrowing cheap from its parent company, Reliance Industries, which is flush with cash, and will be able to lend this at a rate more compelling than banks, which are offering a high interest rate for credit offtake to industry. And therein lies the business model of JFS. And JFS will be able to therefore seek a cheap inflow of funds and send it out at a better than market rate to deployment by industry, and therefore make that interest rate swap margin. And this overall, I think, comes at a good time when we are hoping for private investments to take off. We are hoping for capex investments to take off, and not just that, not just industry, even the large population. Now, Reliance Jio has got access to consumer insights, databases, thanks to its telecom platform and its retail platform, pretty much across the board. So imagine the kind of data available, the kind of analytics that can be run, and the kind of loans that can be disbursed by Jio Financial Services and reach its customers without really depending on third-party data. And the direct marketing that can be done using the Jio platform, I think it's a golden opportunity. And just when you start thinking that, hey, you know, Reliance has diversified enough, has done it all, it comes and does a little more.
I'm amazed by how diverse a business model can be. I mean, I think two entities that stand out clearly, one being Adani and the other being Reliance. There is no business that they are not in, Karthik. From your telecom to, you know, airports to financial services to everything, literally everything.
Absolutely, and why not? I think you have to give it to the gumption of the leadership at Reliance Industries. It's not a company that, that sat on its laurels, sat on the glory of what Dhirubhai Ambani created and left to the children. I think despite the spat between the two brothers, Mukesh and Anil Ambani, I think the business acumen of Mukesh Ambani is something else. You know, it's at another level. And not just this demerger, I think look at the bets Reliance has made with getting Hamleys into India, with getting Pret a Manger into India, and not just at the retail level. Look at the revolution created in the telecom space. Who would have thought that a new entrant entering a fairly robust, buoyant telecom industry in 2017, if I'm not mistaken, 2016-17, is going to create such a disruption in tariffs, in data availability, in low-cost mobile phones. And
give them a run for their money.
Absolutely. And now we have a brand new financial services company which is going to be listed. And as it lists, depending on the share price, it is likely to make it to the Nifty 50 stack, which is among India's 50 most valuable companies, and the Sensex 30, which is India's 30 most valuable companies. So on day one of its listing, we'll see tomorrow, there are talks that JFS could actually be among the 30 most valuable companies in India, the 5th largest financial services company.
Which are the other 4 for the benefit of our viewers?
So you have IIFL, you have L&T Housing Finance, you had HDFC, which was a lender in itself. So you have the big wigs, right? You have those who have the larger ambit of banking and financial services as the core business. But Reliance, also remember, Reliance Industries has the NBFC license. It has a license to operate as a non-banking financial corporation. And that is going to come to extreme use with the listing of JFS.
Absolutely. And of course, all eyes will be on the listing of Jio Financial Services. Another stock that we are going to be tracking very, very closely would be Infosys. And before we go to stock and how the stock has performed, what we do know for a fact is that it signed a mega deal to ensure that AI it imbibes AI into its business model very, very closely, and we're looking at signing an AI and automation deal. This is something that IT companies have been eyeing for a while, Amit. I mean, you've been tracking the progress, growth of AI and the adoption of AI in India, but Infosys signing an upward of $2 billion deal is very, very big, a huge number.
Yeah, it comes close to the heels of what Wipro is planning to invest into AI and their bot. And we spoke about that a few days ago. So that's the way every big IT company will have to go if they have to compete in the years to come. So it is no surprise to me that Infosys is making a big, and it's going to be bigger than this. I'm sure they're going to have bigger investments than even this one. TCS, Infosys, Wipro, Tech Mahindra, all of them, in the days to come, you will see big announcements, I suspect, coming in this arena.
Okay. I want to understand, Karthik, what is this deal all about? Infosys stock closed and gained, I think, about 2 percentage points yesterday. I don't know how the stock is, if it's up or down today. I think
Infosys is up about 1% right now, Shweta.
Okay.
Up about 15 rupees, trading at 1490 right now.
Okay.
It opened a little low, but I think this news quickly gained momentum, and right now it's at about 1490, up about a percentage or so.
So what is the multi-year agreement all about?
So this multi-year agreement, Shweta, from what has been reported, the story broke on Reuters last night, and it has been corroborated through sources in other publications also this morning. Now apparently it is an existing client of Infosys. One client or more than one client, we don't know yet, but it is an existing client. This deal is spread across 5 years. So Infosys is going to spend $2 billion in artificial intelligence, which is going to entail both AI as well as automation development, modernization, maintenance of whatever is being developed, whatever is being built and deployed, and overall keeping this client and this project, kicking for a span of 5 years. Now, again, timing is important here. Amit mentioned about Wipro, and I think what we saw was Wipro announcing that AI 360 tool, which is going to be deployed. Again, I think Wipro was talking about training some 35,000 of its in-house talent on artificial intelligence. Now, in this case, we are talking about, and no doubt AI is definitely the flavor of the season right now. So any IT company that misses the AI bus, and Infosys incidentally is late in riding on to that AI bandwagon, and it had the opportunity with Vishal Sikka as its CEO, which of course led to an acrimonious exit, and that AI vision could not really be fulfilled ahead of the curve of AI beginning to rise fairly steeply this year. So we've got likes of Elon Musk investing in AI. We've got Wipro making that announcement. We've got pretty much any serious IT player who wants to stay in the business of information technology they will not be able to ignore AI. Now, the timing, as I started by saying, is important for Infosys because tomorrow, July 20th, is when Infosys is going to table its results for the first quarter. So, earnings for Q1 of Infosys are slated for tomorrow. Not that it's going to have an impact on the June quarter earnings, but I think the whole guidance, the whole estimation for revenue growth in an environment of headwinds from the West and discretionary tech spends being cut from the West, I think this timing of bagging this $2 billion deal is absolutely important and timely. Now remember, Salil Parekh had in the month of April given an annual growth guidance for Infosys at about 4 to 7% as the range. A sequential quarter-on-quarter growth is expected at under about 1% or so, primarily because of the looming yet to come recession in the US. Right. So I think tomorrow we will see the results for the June quarter of Infosys, and this larger announcement on deployment of AI for clients, and more details on this $2 billion deal should emerge in tomorrow's earnings call.
All right. So more details will emerge tomorrow. We'll of course keep bringing you all those details as far as Infosys and the $2 billion AI and automation deal is concerned. Shifting focus to another important story that we're tracking, and that is with respect to Asian Development Bank. ADB has retained a growth forecast of 6.4% for the ongoing financial year. Now, this is, they've retained it. India is obviously expecting to grow at an upward of 7%. What it says, very interestingly, that inflation is likely to cool down. Now we're talking about inflation every day. We're seeing pulses, vegetable, tomato prices that we continue to discuss days on days at an all-time high. But ADB, is projecting that inflation will in fact cool down and India will grow at 6.4 percentage points. Is that a fair growth estimate, given that we're doing fairly well when it comes to all the other parameters?
So Shweta, we'll come to inflation later. The inflation data is for the entire Asian emerging markets block, not specific to India. But yeah, the 6.4% growth rate for India is India specific. Now, do you remember what was the estimate forecast for FY23 by Asian Development Bank? 6.4%. How much did India actually grow at? 7.2%. Right. So I think ADB, I feel, definitely needs an Indian economist in the driver's seat to begin with, right? So that the parochial view on India's growth at some point meets reality, right? But I don't want to...
That's fairly, if you come to think of the difference between 6.4 to 7.2 is fairly large.
Absolutely, absolutely. It's trillions of rupees worth, right? Or billions of dollars worth of delta between a 6.4% and a 7.2%. India's economy, I think, was last year at $3.2 trillion, right? Now, $3.2 trillion, if you were to take a 7.2% versus a 6.4%, will be a couple of $1 billion for sure, right? Couple of $100 billion would be my guess. So, yeah, so I think the statistics, the analysis, the research that goes into ADB's disclosure of these numbers needs a little more sense of reality, I believe. But I don't want to sound, foolishly bullish on the India growth story. Right. There are enough signals
we continue to discuss exactly signals and parameters that continue to augur really well for us.
See, I think very simply put, we have the G20 finance ministers meet happening in India, right? And look at the remaining pack of 19 countries, leave India aside. India is definitely in a healthier spot when we talk about, India's growth rate, when we talk about unemployment rate, and when we talk about inflation, right? So overall, India's macros are in a fairly sound space right now in the G20 block, right? Even in the emerging market space, look at China. China's growth data, which has come out, many analysts are suggesting right now that the real impact of China's zero COVID policy is yet to register in numbers. Remember, the zero COVID policy was eased only 6 months ago, and the figures that we are seeing of the last 6 months and the quarter-on-quarter decline in growth, it is still growing, but the clip at which it is growing is slower on a sequential quarter-to-quarter basis. Now, the real impact of the zero lockdown policy and the dwindling exports from China and the rising unemployment rate of China, the real horrors of that, many analysts are suggesting, are going to come out only in subsequent quarters. We haven't seen the bottom out of the China slow growth yet. The numbers that are expected to come out sequentially are going to be even slower than what we are seeing right now. And then look at this whole property crisis happening in China, where there is no credit offtake, there is no fresh investment in real estate, which is a major driver of many big companies, including Evergrande. So Evergrande's own loan book right now stands at about $340 billion, which is one of the biggest realty developers, financiers in China. Coming back to ADB's projections on India, I think ADB has said that 6.4% is the expected growth rate this year for India. 6.7% is the expected growth rate for the next financial year, which is FY25. Right. I think this year, given it is an election year, and given that we will have to tame inflation come what may, and we have been fairly hawkish in taming inflation, yes, inflation would ease, growth should pick up, there would be new PLI and new semiconductor incentives being announced which are going to add investments. There is going to be continued government push on building highways, building roadways, which is going to be capex investment. So even if we are in a low consumer sentiment environment right now, overall GDP growth is definitely going to surpass 6.4%.
Okay.
And RBI's estimate is 7%. And Ministry of Statistics, everybody sticks to that estimate, give or take a percentage, 100 basis points here or there. So, 10 basis points here or there. So I think overall we will be in a range comfortably above 6.4% for this year. Next year, 6.7%, I think, depends entirely on what the election results are going to show, what a new government or an existing government for another 5 years, depending on how the electoral votes come in, is going to decide on how this view of India's growth is going to shape up, and then eventually action around that view in terms of growth. Now, inflation specifically, since you asked, I think the inflation outlook, Shweta, is on Asia, not specifically on India, and the inflation forecast has been kept at 3.6% this year and 3.4% next year. So 3.6 and 3.4% are the inflation estimates for Asia as a whole, and within this, fuel and food prices are expected to decline, and therein leading to a lower inflation. But that is Asia specific, not really specific to India.
No, I think from what I'm reading, Asian Development Bank says growth at 6.4% is going to be on the back of cooling inflation. So
cooling inflation in the region.
In the region and in India. We will have to, of course, wait and watch out for.
So India, hopefully, if you're able to meet that 4%, hammered down inflation by fiscal and monetary policy both working in tandem. I'm not sure we'll do much on the monetary policy front on tightening right now, but if you're able to beat it down,
fiscal either, given that we are in an election year.
I mean, let's see. We might have better tax collection, right? We might have better GST collection. All of that is going to add to government's revenue.
Right, and my only worry is maybe we'll have more, SOPs being doled out, given that it's an election year.
As long as there is more earning and there is more deployment of that earning to any growth sector, whether it is industry, whether it is infrastructure, whether it is social, upliftment, as long as that money is being collected and deployed towards a productive activity, it is going to lead to some sort of growth. Right. So if you're able to hammer India's inflation down to 4%, I think RBI, Ministry of Finance, Prime Minister Narendra Modi will be in a very happy situation.
Absolutely, and that of course is going to be one of the important it's an important mandate for the government and as well as for the RBI to bring down inflation. But another interesting story that's unfolding in India, and that is by the way of G20, India's G20 presidency. There are efforts being taken, Amit, to ensure that crypto regulation becomes a reality.
Yeah, so India has submitted a presidency note to the G20 to basically chalk down a roadmap for crypto assets and the risks related to crypto assets and regulating them. Now, their implication basically was towards emerging markets and developing economies. There is a certain report that states that early enthusiasm towards cryptocurrency is fading in these nations. So this first report has been filed, and a synthesis report will be prepared after this first note has been filed, and a synthesis report will be prepared by the IMF and the Financial Stability Board, and which will be discussed in the next summit. So that is where India stands right now on crypto. There is a concern. The enthusiasm is fading. Crypto assets regulation is a concern. So this is where the roadmap is basically, the world is basically looking at a roadmap to basically address these issues.
And they're looking at a global framework, and it's interesting since we're talking about G20.
It needs a global framework.
Absolutely, needs a global framework, and we're talking about India's G20 presidency. I think it also brings me to an important picture that Prime Minister Modi also shared on social media with all the central bank governors, Geeta Gopinath, and finance ministers, calling it women empowerment. All those ministers, of course, and the central bank governors meeting in Gandhinagar in Gujarat. Crypto regulation continues to be a key concern. There needs to be regulation, but there is no consensus just as yet. This paper presented by India could give us some insight or way forward into what a regulation could look like as far as cryptocurrency is concerned. I think one of the major concerns for India is using crypto for financing terrorism, and they've taken that up in their agenda over and over now.
So Shweta, there are the report that or the paper that India has submitted as part of its G20 presidency is basically highlighting three principles on which a crypto regulation should be formed, which will safeguard India's interest at least, right? Now these three are, number one being economic and financial stability. So you don't want a deregulated asset class or currency class disrupting the financial stability of, let's say, the central bank, which is the RBI, economic stability of the country as a whole, and in addition to that, even let's say, the security markets, right? The whole SEBI highlight on security markets and shares, which are also another asset class. We don't want any disruption on economic and financial stability. So that is point number one as far as India goes. Number two, I think India is very clear in its paper that investor education and the risks associated with not protecting the investor. So investor protection and investor education are going to be very, very key central tenets of whatever regulation India wants to push on the crypto side. The third, equally important one, which I think is more lip service than something that we truly believe in when it comes to crypto, is this whole notion of not stifling technological innovation, right? So these are three concerns that India has tabled as part of its presidency paper, and it says that we want financial stability, economic stability to not be disrupted. We want investors to be protected and educated, yet we don't want to stifle technological innovation, right? So let's develop a framework at a global level which addresses these three challenges and becomes a very potent regulatory framework which prevents, let's say, issues like terror financing, which prevents issues like destability, money laundering and destability of global markets, right? Now, RBI has, ever since we started hearing of crypto, RBI has been very skeptical of cryptocurrencies. In fact, on the sidelines of the G20 FM and central bank governors meet, Shaktikanta Das has again come on record and stated that he is going to continue backing the ban on crypto assets. At the same time, you've got the Bank for International Settlements, bank as in BANQUE, BIS, which again says that crypto is a fairly unsuitable tool to become a replacement for currency as we know it, right? So I think the whole debate again is you keep an unregulated animal out there which has great technology riding on it, but you don't know who's going to tame that animal. Is it going to be the central bank? If that is the case, you consider crypto to be a currency. Is it going to be financial markets regulator, SEBI? Then you say, hey, crypto is an asset class. Is it going to be, let's say, the Ministry of IT? Then you're saying it's just a technology with no real monetary value attached to it. So I think this whole thing is going to now, with India tabling its concerns in the capacity of G20 president, ahead of the September meeting, we should see some concrete framework being proposed at least and thereafter being implemented.
I think a question that will remain is whether this, and as you pointed out, whether this is going to be a framework for India and who presides over this framework. Would this be a global framework or only for G20 countries, since we're only talking about G20 finance ministers meet?
I think, I think bodies like G20, bodies like ASEAN, bodies like SAARC, while they generate a lot of influence on how the world should function or how a region or a bloc should function. I think at the end of the day, every country is absolutely unique in what it needs as part of of its own regulatory framework. Every country will be very closely monitoring its own regulations, its own legal and social obligations to its citizens, and every country will hold the right to execute a framework which is central to what their country believes is the right path for them. India is trying right now through its G20 presidency to push for a framework which will influence the regulation across this G20 bloc and in turn the rest of the world. But I think it'll not really be able to implement something outside of the borders of India despite the G20 presidency.
Right. But as far as cryptocurrencies, there's some sort of regulation that we could see coming into place or being kicked in by September of this year, at least a framework upon which perhaps G20 nations will draw their own crypto regulation going forward.
It could be beyond G20, because what they have said is this report, the synthesis report, is going to be prepared by the IMF and the Financial Stability Board. So that is a little bigger. So I believe India is using its clout in the G20 to basically push for this. So that's where it stands.
All right. So that's news that people who are trading in cryptocurrency will have to keep an eye on. But shifting focus now to another important story that we're tracking, and that is coming in by the way of PFRDA, which is the Pension Fund Regulatory Authority, hoping to start investing in sovereign green bonds. What does it really mean for pensioners?
So, Shweta, what it really means for pensioners is that there is one more asset class in which
their money will be invested.
Right. Now, look at the corpus that PFRDA has. The assets under management of the pension corpus of the National Pension Scheme, Atal Pension Yojana, so many other pension schemes that we have. All of these are regulated by PFRDA, right? Assets under management for PFRDA last fiscal 31st March 2023 closed at about 9.7 lakh, closed at about 8.98 lakh crores, almost 9 lakh crore rupees of assets under management last year. As of 8th July this year, that 9 lakh crore almost touched 10 lakh crore rupees, right? And given the way the markets are going right now, PFRDA Chairman Mr. Deepak Mohanty believes that the corpus could surpass the 11 lakh crore mark as well, right? So that is the volume of the corpus available under PFRDA. Now, how does this corpus grow? This pension funds which get accumulated are deployed back into markets, mostly into safer bets, right? Which would be bonds, which would be even US Treasury, for example. It could be other safer assets. Gold could be one asset class. Up until now, the diversification into pure play equities had not been very robust, right? But I think last 2 years or so, ever since the OPS NPS debate started, old pension scheme versus new pension scheme, the idea being that let's not restrict our retired golden years folks to actually just depend on what their stipulated pension is, rather give them the advantage by opting for new pension scheme to get market linked returns on their investments, given the overall bullish sentiment in the markets. And therefore, part of the corpus would be invested in safer havens, part of the corpus would be invested in equities. And that investment in equity markets by way of PFRDA and the 10 fund managers who manage this large AUM of almost 10 lakh crore rupees, the investments made in the equity markets and the overall diversified markets has yielded a return of almost 22% last year. And 22% is well above the average, market return that you expect over a long-term horizon of equity markets returning about 12%, 13%. So a 22% return on the corpus, on the AUM invested by PFRDA and the 10 fund managers therein. Now, what are these sovereign green bonds? and what are the sovereign gold bonds, and what are the other sovereign
Right.
bonds.
Green bonds, to be particular. Well,
Sure.
that's very interesting, I
Right.
think.
So-
For people who believe in, we keep talking about SDGs, we talk about sustainable developments, and so this is where I think sustainable development kicks in.
That's right. So, what are these bonds really? These government-backed, sovereign-backed bonds. These bonds are primarily financial instruments which the government launches every now and then to be able to suck out some money from the system, right? If the government needs 16,000 crore rupees, it says, let me create a bond through which I can raise 16,000 crores, which is exactly what the government did last year, right? The 16,000 crore rupees is what the government raised when it launched the maiden tranche
SGBs.
of SGRBs. These are green bonds, not
Green
gold bonds. So SGRBs. So the first maiden announcement that happened last year for SGRBs, the government was able to raise 16,000 crore rupees to deploy into more sustainable, environmentally friendly, climate friendly industries, businesses, infrastructure, and so on. Right. Now, how this really works is government issues these bonds. RBI usually pays the government money, 16,000 crore rupees, Senuraj, right? 16,000 crore rupees, takes these bonds, and then these bonds can be opened up to general public, institutional buyers, being traded on the stock markets as well. So overall, multiple takers come and buy these government bonds of the RBI. Now, this 11 lakh crore rupees corpus, which is likely to be surpassed by pension funds, part of that is likely to be invested in the next tranche of the sovereign green bonds.
Okay.
Right. So primarily that's it. There's not much to read into it. So I think the diversification now is coming by way of not just safe havens, which are government backed, which are government bonds, treasury bills, etc., and the slightly riskier but high return yielding stock market investments. And then, of course, the fixed deposits and the other safer bank-linked investments. Now, PFRD is saying that it is also going to consider parking a good amount of this corpus of 11 lakh crore rupees into the sovereign green bonds when they open for the next trade.
All right. So I think at least for pensioners, they can rest assured that the money that they're going to get or the money that they're going to earn by the way of interest rate would be from funds that are usually going in to develop country in a more sustainable fashion, less greenhouse emission. Anybody who cares for the environment
So their corpus,
out there,
which
their
they
corpus
have earned, is being put to good use by going into greener avenues.
Absolutely, greener avenues as they move into greener pastures. Shifting focus now to another important story that we're tracking, and Amit, that is coming in by the way of people who have not really linked, and I'm talking specifically about NRIs who have not linked their PAN and Aadhaar, and their PAN card perhaps became inoperative. They have now been asked by tax authority to come and with a proof of their residence as to where they are in order to ensure that their PAN becomes operative once again.
Yeah, NRIs themselves. Now, regarding their PANs becoming inoperative, now the IT department has said that it has mapped the residential status of NRIs in case they have filed their ITRs in the last 3 assessment years. In case they haven't, is when they have to basically
file the ITR.
Those who have, the IT department has mapped them and has basically intimated the residential status to the jurisdictional assessing officer. Now, the jurisdictional assessing officer is the one NRIs have to approach, the ones who have not filed and whose PANs have been basically become inoperative due to this, with their residential statuses and their income statements. So that is where it stands. So it was a concern that was raised by NRIs themselves, which basically the IT department is addressing.
So basically the government is saying that you can file your ITR, but at the same time you will have to update your residential status.
Yeah, but the updation is basically asked for mostly in the case of those who have not filed their ITRs. So basically for them, they have to file their ITRs and there is a proof of their residential statuses and their income statements.
So I think it's for all the NRIs and OCIs whose PAN cards have become inoperative lately, because they were exempted from PAN and Aadhaar linkage. This is an important story that we've been discussing here. I think the only set of people who are exempted from linking their PAN and Aadhaar, and their PANs have become inoperative. At this point in time, the government continues to say or maintain that you can file your ITR. However, you will have to update your residential status. So some relief coming in there for people who are living abroad. Now, another important story that we're trying, another interesting story that we're tracking is coming in, by the way, of an iPhone, Amit, and I think perhaps you'd like to apprise our viewers of why this iPhone is selling for 1.5 crore rupees.
Phew.
And that is not this iPhone,
Or
it is the
this
first
size
iPhone which
of
was there in the
iPhone.
market for only 2 months.
Only 2
Only
months.
2 months. So the 4GB iPhone, I don't know whether it was called iPhone 1.
I don't think
didn't
so. I
have
think it was just called the Apple iPhone.
iPhone,
Yeah.
yes.
So, so those who bought that 4GB one within those 2 months that it was there in the market, the original price was $499 at that time. It is selling for $190,373 right now at the auction that was conducted by LCG Auctions, which hosted the sale.
So it's become a rare object.
Yeah, the funny thing is the 8GB one, which basically what the consumers wanted at that time because of more memory, went for a lesser price, which was at that time selling for $599, was auctioned at a lesser price. The 8GB one in February 2023 went for only $63,355 at the auction. The 8GB one, which was auctioned in October last year, went for only $39,340.
Only, I like the way you're saying only.
Only.
To all
Compare
these
that
prices.
to 190 and 39.
Which in Indian rupees
So
is 1.5
my-
crore.
my
I'm just
advice to
reeling
all-
under the
My advice
information.
to all those people who bought iPhones and Blackberries
have a
particularly because that is
Blackberry.
extinct, and to keep them because someday maybe is in the very near future at some auction it will become very basically priceless.
Yeah, but then what I mean, for someone who doesn't really understand the need for auctioning a first generation iPhone, is it because it's rare?
Somebody is buying it. So somebody is selling out
Collector's edition, the vintage collector out there.
for a phone that was there in the market for only 2 months.
So I think that is what the availability of the iPhone 4GB for only 2 months would have meant, that in any case it's a new product. It is the first touch screen smartphone out there. It is pretty much the first small portable device from the Apple stable.
Yes.
Remember the iPads came much later. So
All these things, what I'm alluding to is when it came, it was rejected by the market.
it was rejected by the market. It stayed only for 2 months. One of the dejected buyers who would have been an early movers into the Apple ecosystem bought it, kept it for what, almost 10 years or so now? When did the iPhone come? 2007, almost 15
2007,
years.
yeah, so-
Almost 15 years. Held on to it for 15 years. I wonder if the phone even switches on, because I'm sure
very
battery
unlikely.
replacement
Absolutely.
would have been out of the market soon after the phone was discontinued.
I mean, whoever that person is has become a millionaire at this point in time, and good for them. Good for them. Another person who's become a millionaire is in India, has earned as much as 3 crore rupees by only, the only good thing that they did is they had tomatoes at the right time, at the right opportune moment, and they were a farmer. I think another important story that we're tracking, and that is by the way of tomato farming. A tomato farmer has become a crorepati, if I were to put it like that, earning as much as 3 crore rupees.
I'm just
Karthik.
looking at this story. In fact, it's just come fresh in the wires, Shweta, and this is Ishwar Gaikar, a 36-year-old farmer on the outskirts of Pune in a village called Junar, which is in the Tehsil of Pune district, has actually earned, you're right, on his 12-acre land, he grew tomatoes and has had an income of 3 crore rupees. No joke there, you're right. 3 crore rupees is what this, of what Ishwar Gaikar has earned. And he spoke to PTI. He has sold 18,000 crates of tomatoes, each crate comprising 20 kgs. He sold it to the Agriculture Produce Market Committee for 3 crore rupees. And he aims right now, that's not it. So 3 crores is what he has got already. He has some leftover stock, it seems. And he's saying that he aims to earn another 50 lakh rupees by selling the remainder produce which is roughly 4,000 crates.
All right. So
I mean, you've heard of people minting old iPhones.
crore.
You've heard of people keeping stashes of gold. You've heard of people keeping stacks of currency notes in their cupboards and under their pillows. And here we have somebody who has...
I don't know if I should become a farmer or become a hoarder.
And here you've got somebody who's still got 4,000 crates of 4,000 crates, each of 20 kgs of tomatoes left in his stock. And he won't be able to hold on to them for long. He'll have to push them out immediately.
And you know, it's interesting because on one hand, it's a story. It's a good story. It's a story of a farmer getting his dues.
Fetched on 11th of June, 770 rupees per crate. Okay, that is the month of June, before we saw the tomato prices really skyrocket, which was roughly about 37 to 38 rupees a kg. On July 18th, almost a month later, he has sold it for 2,200 rupees per crate or 110 rupees per kg. 3x within a span of a month.
Absolutely. And I think while it's a feel-good story at this point in time, it's also a story of the rising, soaring tomato prices. And the western part of India and the southern part of India, these are primary tomato producing regions. The northern part of India, which is where we are sitting at the moment, tomato prices continue to be at an all-time high, and hence the reason why a person who's harvesting tomatoes in Pune has become a crorepati.
3 crore rupees, another 50 lakh rupees expected, 18,000 crates of 20 kgs each sold, and another 4,000 crates in his kitty. Wow.
Well, for those who do not have a farmland or those who have a farmland, I think it's a good opportunity to harvest tomatoes at this point in time. It's going to fetch you great, huge, big returns, better than any market-linked instrument.
When we open markets tomorrow, I think we should have an index for tomato prices also.
Absolutely.
And let's see how they trade for the rest of the day.
Absolutely. I think with that, it's a wrap on this edition. Thanks very much for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that